So this video is going to be an update on the coronavirus. We just talked about it in the past video. I haven't had a chance to even upload it yet. That was on Saturday, today's Sunday. I'm trying to get everything done and up and ready today. But the markets, the futures market looks like it's already fallen, steeply. And basically OPEC, what Saudi Arabia is a part of OPEC. They're the number two producer, America being number one as of right now. But they were trying to work out a deal with Russia. So Russia and OPEC trying to say, hey, let's cut production because, like we talked about earlier, the supply chain, China's at a halt. You have Italy now halting, and you just don't know how widespread this can be as cars are staying parked. It's economics, right? Like you had this much supply and you had this much, demand relatively, emerging markets to, wanting this oil because, it's cheap to produce and do stuff. But all of a sudden, if the demand for that oil drops down because you got everyone on lockdown, then the oil price or the supply is high and you got to get rid of the supply. The price has to come down. So they were trying to cut the supply to kind of keep the price up and keep it afloat. Well, the key strategic point in this is Saudi Arabia. I remember reading somewhere like they could pump out oil at $3 a barrel or even I think a little bit below that and they would still be profitable. So Saudi Arabia is like, this is going to be a chance for them to gain market share because they have an abundance of oil. And I think they're definitely, and I mean, with Aramco, their company that went public recently, obviously it's not private, now it's public, and they're facing that scrutiny, right? And I think they're starting to feel the pressure. Like if they cut supply, then it's kind of like, well, for them it doesn't really make sense, right? Because if they could sell it even at anything above $3, like $4 or $5 a barrel, then that's that's fantastic for them, right? Because they're still making money even in a time where it's hard to make money right now because everything's backed up. Everything is just and this is just a disruption. It's huge because this could, if you have money right now and you're sitting on cash, I would wait. Like I said, even if let's say the market pops, it's futures are down like S&P, I think 5%. This is the lowest price, by the way, since the Gulf War, since 1991. Damn, in a year that would almost be 30 years ago. That's crazy. And like I said, sitting on cash because we don't know what the supply chain is really going to bring, right? Like, so this is just the start of everything, right? So, think about it. Okay, prices are low, but if production's not being made here, right? And so we're not having the ships come over and the containers aren't being made, or in Long Beach and SF and other places and Oakland, like where the containers are coming and those products are being moved by our big rigs and our trucks. That's going to put a huge strain. That's like trucking has been the lifeblood of America, right? So and I know a lot of trucking people that have levered up. They're buying big rigs at like 0% down, but they got to make those payments. But if there's no loads to move, what do you do? How do you make those payments? How do you survive? Hopefully they're on cash enough to sustain this thing. And oil prices are getting lower because they got to produce out. But if people or more cities and more places are being quarantined and cars are just kind of sitting there, I mean, you could give oil for free. It doesn't matter, right? Because we don't, at the current moment, we have no use for it, And even when we start back up, this could cause a huge damaging effect because let's just say X number of, like a significant number, even like 2 or 3% of trucking companies or whatever go under. We're already short trucking jobs here and trucking in America. And if those companies, if this has, 2-3 months and trucks slow down and a couple of companies go under, and then production starts back up, well, now we got to wait for those trucking to start back up to move the products. So that's even a bigger supply chain disruption and not disruption, but that I would call that's a destruction. You know what I mean? So now you got to not only wait for those trucks to come up to you, but to start moving goods. And who does that affect? Literally everyone. I mean, you're talking Amazon, Target, and Walmart, and every single company. If you are relying on goods and products and services to be able to get moved, that are coming in from overseas or made or have components from overseas, and everything is backlogged, everything's locked up, dude, this can end up being massive. Now, I know you see all the memes and stuff. Like I just saw one that was hella funny, dude. It was just like, I lived through the bird flu, the swine flu, at Justin Bieber. I got nothing to worry about. And it was kind of all fun and games. But if this thing does turn out to be a pandemic, where, I mean, let's hope to God that it doesn't kill millions of people, but let's even hope to God we get it fixed quickly. But if it does at least sicken people, and like millions, if it makes you at least bedridden for like a week, or it slows down, like it's not just like a regular flu swing, right? It's like this could really slow production on all levels, even down to the local businesses. Like if you have a mom and pop shop, and you can't get supplies coming in, and you got payments to pay, that hurts. And then if you can't pay employees, and they can't make rent, and they, Americans alone, like over 50% had less than $1,000 in savings. I'm more worried about those guys more than anything, because then it does come down to how do you survive? Like you're going to have some type of governmental aid come in, and not just in the sense of like, like the CDC coming in and helping out with like medical stuff and all that. But you might have to have government aid coming in to like help bail out, private industry in the sense. Like, if you think about, even farmers, because I'm from the Central Valley, we're the food basket of the world. If these commodity prices, continue to drop, like if almonds can't sell for $3-4 a pound because there's no demand for it, and it's sitting there, and the way it works is you have a small farm, and that farm negotiates with a packing house, and that packing house takes, they offer whatever, like let's say $1 or $2, $3 a pound, and they'll go pack it, make it, ship it, do whatever they need to do to get it to the places they need to go. Well, if the packing house is like, well, we have no one to sell it to, and it's going to be hard to move it, and you're kind of logged up and jammed up, they can't offer the farmer that $2-3 a pound. They'd have to go, I don't know what they'd have to evaluate the market. So then what does that poor farmer do? You're relying all year on, that crop to be sold in order to pay your debt, pay your employees, pay your chemicals, do everything. If you think about it, this is not just a supply chain disruption anymore, like we talked about toy industry and Apple and stuff. This could even affect small local economies, and it's like a ripple. Think of like you're throwing a rock at a water, and it's rippling out. So it's starting, and the first ripple was boom, like the very, very first people that were affected, which were these major manufacturers. Like, oh shit, like you're pushing thousands of units of something, and all of a sudden the Chinese factory or certain place gets shut down, and you're like, okay, you're feeling it. Okay, well now if the ripple starts going to another section of the economy, then another section of the economy, then it eventually gets trickled out, and now we're really in trouble, right? So I don't want to like sound the alarms and say, oh God, we're going to pray for the worst. I am still a believer in fundamentals, but at this point in time, unless you got a really smoking deal lined up for real estate or whatever, I would say just sit it out and just kind of wait, man. And that falling knife theory, it's better to miss a 10 or 20% jump than it is to catch another 10-20% down because you think there's a good deal. Once things stabilize and you could get things going, then you could go back and redo your fundamental analysis, right? And say, okay, well, this company's making this much a year. It's going to continue to make this much a year. You know what I mean? But right now, I think it's just, it's fear, it's speculation, and it's just a lot of uncertainty. And all these three things are just something that it's just not worth taking that risk. And I know Buffett's quote, which is, he has a lot of great quotes, but I love this quote. It's like, you got to be greedy when others are fearful, and be fearful when others are greedy. But this is a time that there's not greed or fear. This is just a time that everyone is just like, we don't know what we're going to do. And, just with this oil deal going down and futures plunging, and also the 10-year getting below 0.5%, I think, guys, the best thing to do is just sit it out and wait. And as more news develops, as more stuff comes out, we'll be better equipped to make a financial decision. But I've never in my lifetime seen something like this, and this just goes to show how intertwined we really are as a world, and not just as America or California or anything like that, as a world, So just my thoughts on it, and I love to hear you guys' perspective. You guys like, comment, share, follow, make these for fun, and just trying to grow the page and bring like-minded people together. So thanks for watching.